Howdy there, folks. Welcome into today's video. 51-degree Las Vegas, Nevada. Got a little snow out there on Mount Charleston here today, okay? Few subjects to discuss in today's video. Very important. A major, and I'm talking about major stock, just fell below March of 2020 lows. We got to talk about that one. This stock just keeps falling and falling, okay? Speaking about just keeps falling and falling, Tesla stock. A lot of folks are wondering, like, how far is that one going to fall? Like, is that one going to go back down on March of 2020 lows? Like, what is going on there, okay? I want to give my perspective, my opinion on when Tesla stock stops falling, essentially, okay? Number 3 thing we got to talk about here today, Google McDougal down again. Down, I mean, Qs were up today. Google down, pretty decent size. Again, massive underperformance. Any hope for Google? I want to tell you kind of what I think is going to happen with Google here, okay? Number 4, PayPal is well below March of 2020 lows now at this point in time. When's that coming back? RH earnings just came out. We'll talk about that one, a little scary. Lululemon's brings the blue blues. We'll talk about their earnings. Palantir just got a new major contract. I want to talk about that a little bit and kind of what it means for Palantir moving forward. And then I got some good news to share with you guys at the end of this video. So yeah, a lot to get into. Smash the thumbs up if you enjoy a video like this. Thank you everybody that subscribe to the video, and let's get into this. Okay, so first off, CRM, one of the most important stocks in the stock market, Wall Street darling. This baby just fell below March of 2020 lows. Now at this point in time, it's down to $130 a share for Salesforce, okay? I got to be honest, this one's fallen so much now, I'm going to likely start buying the stock in 2023. I've never owned Salesforce stock before, but it's going to be one I start picking up here in 2023. The valuation is just way too compelling. The management team's way too good. I understand Brett Taylor leaving, but at the end of the day, they have a lot of key people at that company. Their products are amazing, and it's gotten too undervalued now at this point in time that I've got to actually step in and start buying this one in 2023 and make it one of the key stocks I just load up on. Of probably there's going to be about 10 stocks in that category. Meta's obviously going to be in that category. Google will be in that category. Several others. But CRM is going to have to be one. It's a profit-based company regardless whatever happens in the economy, right? Obviously CRM is going to do much better in a stronger economy. We all know that, right? But it doesn't matter. Bad economy, good economy, decent economy, whatever. Palantir. I'm already getting on to Palantir. CRM is just a cash flow machine, a profit machine, and will continue to be. So yeah, that's it, man. But in terms of its stock price in the short term, it's in a bad place, man. And it's likely going to be in this kind of baddish place, let's just call it that, for 2023, right? And so it's a great opportunity for a long-term investor like myself that can look past this next 12 months nonetheless, okay? Tesla, we got to talk about this one. Is it going back to March of 2020 lows? Because this one just seems like it can't find a bottom anywhere in sight, right? And first off, if we look back to where the stock was in March of 2020 lows, it was below $30 a share, okay? Below $30 a share on a split adjusted basis. So is it going back there? The answer is absolutely not. Okay, it's not going back there, and that's regardless of what happens in the economy. But I can tell you where I do believe this stock could be potentially going. Okay, and here's kind of my thoughts around this as somebody that's owned the stock for many years and followed the stock since they went public back in the day. I think it's a realistic possibility that this baby goes down to like 150. I think that's a realistic possibility. I mean, if they come in and report some maybe a little troubling numbers, there's some more weakness in the market, I think 150 is not out of the question at all, in my personal opinion, okay? I mean, what are they doing out here? Flying choppers all over the place? What is this, war zone? Holy smokes, man. They got the choppers going overhead. I think troops are dropping out. My goodness, okay? Come on, man. I'm trying to record a video here. $90. Massive recession. Let's talk about that. If we're going to have a colossal recession, Tesla's going to 90, okay? But that would have to be colossal. I'm talking great financial crisis type, massive, epic type recession, okay? That end of the world type one where it's like millions of people losing jobs. That sort of economic devastation, banks completely drying up in terms of loaning money, folks just not having the money to buy Teslas. Like if things got that ugly, $90 is in the cards for that stock, right? And also assuming China got really weak for Tesla as well, that's where that stock would be going, which is almost 50% down from here. Okay. But that would be like end of the world type situation, right? Great financial crisis type stuff, okay? And yeah, 90 is a long way from here. But if you're really that bearish on the economy, over this next 12 to 18 months, that's the price we'll see if you're really that insanely bearish, okay? The market's priced in a mild recession. And so, if we get some sort of mild recession, you're probably going to somewhere in this range, right? But let's be very clear. Tesla stock has not priced in a great financial crisis type recession. Tesla stock has not priced in, the stock market in general has not priced in a great financial crisis type moment, okay? If we get that, unfortunately, this baby's got like another almost 50% downside, which is absolutely insane, okay? Nonetheless, I'm going to likely step in and be a buyer of Tesla in 2023, which is the first time in years that I've been a buyer of that stock, okay? Google McDougal. Q's up, Google down again today, another 1.2%, and the Q's were up over 1%. So another underperformance today, and stocks sold off 35%. Here's what I think is going to happen with Google here, and what I think needs to happen with Google for them to start to recover, the belief in this company. Because right now, let's be very clear, there's a disbelief. Google's one of the favorite stocks of Wall Street. And the fact that they just continue to sell this baby off, and you see an update like the Qs were up today, and you see Google down, it shows how much disbelief Wall Street has in Google stock, okay? What needs to happen ultimately in Google here, if they want to start to recover the stock price, I think what Wall Street wants to see, they want to see a big job cut. They want to see them do a 10,000 type employee cut, just like Meta did. Meta did, I think it was either 11,000 or 13,000 employees, if I recall, just like Amazon did. A lot of people are of the belief, and even myself, that Google's overstaffed. They've hired way too much, okay? And they've tried to play it cool, and they haven't wanted to fire anybody because we know Google is what Google is, right? And they're always trying to be, this glorious place for their workforce, right? But ultimately, I believe Wall Street wants to see them do a major cut. And I think Google's going to probably have to make that cut. I don't think they're going to be able to make it through 2023 without making that cut. I think if they try to make it through 2023 without making that cut, I can tell you, what's going to happen is they're going to do what they did to Meta, and they're going to collapse this stock a lot more. And I mean a lot more. Look what they did to Meta. Meta was down over 70% year to date at the lows. Over 70%. I don't think they would take it that far with Google, but could the stock fall another 15 percentage points from here, 20 percentage points? If Wall Street wants to take it there, they'll take it there. And you could look at the valuation. You say, well, but it's at a trailing P of this and a forward P. Doesn't matter. Look what they did to Meta. Meta is like disgusting. Even still today, Meta's at way lower valuation metrics than Google. I don't care if you're looking at price to sales. I don't care if you're looking at forward P, trailing P, anything. Okay. And so they will do that to Google if Google doesn't cut. There's just almost no way that Google can make it through this storm and not have to do a big cut. They're going to want to see that before it's all said and done. And until that happens, they're likely not going to give this stock any respect. And don't be surprised if they continue to sell it off more and more and more. And ultimately, they'll force management, just like they forced Zuckerberg, to do a big cut. Okay, PayPal. This stock's well below the March of 2020 lows now. Back then it was like in the 80s. Now it's in the 70s. And in regards to PayPal, they've just got to continue to run their business. I don't think they could cut employees, but I don't think they necessarily need to do a major cut. I think this one just needs to get through this storm. I think this is one they just got to continue to execute on their business model. PayPal and Venmo continue to be two of the top three finance-related apps, out there in developed markets. So PayPal and Venmo, they're doing tremendous. It's just they got to get through this storm. They got to continue to execute with their business model in regards to that one, okay? RH, this is interesting. Then we'll talk about the scary thing about all this, okay? So RH just came out within the last hour or two and reported their earnings. GAAP net revenues came in at $869 million versus over $1 billion at this time last year. RH, by the way, if you don't know, is a super high-end furniture company. And ultimately been in a phenomenal stock for the past, 5-10 years. You look at what that's, the stock price and the performance of the company the last 5-10 years has been tremendous. It's been actually one of the best stocks coming out of the great financial crisis. As far as GAAP gross margins, they came in at 48.4% versus 50.2% in the same quarter last year. So revenue's down big, margins starting to erode, GAAP operating margin eroding in a major way, 19.6%. versus 27.1% last year. Even if you're looking at adjusted operating margins, right, which is kind of like pick and choose what you want to include and not include, still ugly, 20.8% versus 27.7%. So clearly there's a lot of margin problems now starting to come into RH, and they're not even discounting or anything like that, right? As far as their GAAP net income, came in at 99 million versus 184 million. As far as GAAP diluted earnings per share, that came in at 378 versus 588, okay? Now, do you want to know the scariest thing of what I just showed you there, okay? The scariest thing is we're still in the early innings of the real estate down cycle. Like, we barely just entered the real estate down cycle. We've still got a minimum of a year of weakness ahead in real estate, and that's a minimum. But it's a potential that we could have 2 or 3 years more of weakness in the real estate market before things start to come back to life, okay? And so when you think about it from that context, you're looking at those numbers, and it's like, wow, things are already getting that bad for this company? Imagine where their numbers are at this time next year. Think about that for a moment, right? And so I love RH, and I love the stock. I love the company. I'm not stepping in and buying that stock. Not yet. Not yet. There will probably be a time when I step in and I buy RH stock, but it's not today. It's not today, man. Because at the end of the day, I'm just fully of the belief that the real estate cycle has a lot further down to go than where we're at right now. And ultimately, that's going to pull companies like an RH, Toll, other home builders down actually a lot further in 2023 than where they're at right now. I think this is just kind of the beginning of this whole situation, right? Now, I saw this on CNBC as I was prepping my video here, okay? I'm going to listen to the conference call tonight. I can't wait to listen to that. But basically what they said is they said, and I got to listen to Toll Brothers one tonight as well. We expect our business trends will continue to deteriorate as a result of accelerating weakness in the housing market over the next several quarters and possibly longer. Gary Friedman. I like Gary Friedman. You want to talk about a good CEO? Gary Friedman, a good CEO. He will tell it to you how it is, okay? The man has a great vision for his company. He's built a tremendous company that has brand leadership and will continue to build a much bigger brand over the next 5-10 years. But that man, he'll give it to you straight. And he's going to tell you, if business is bad and he expects it to get worse, he's going to tell you flat out, here's what we're seeing, here's what I think we're going to see. He doesn't sugarcoat it. And I've listened to a lot of conference calls with that gentleman. Good CEO at that company. Very good CEO. And you can see with the results of the company in the past 10, 15 years in terms of, where the company's revenues have gone, the net income's gone, the stock price has gone. Good CEO, and he'll tell you to you straight. But at the end of the day, Gary Friedman, he can't control what's going to happen in the housing market over the next couple of years. Okay, that's bottom line with that. Lululemon down 6.5% after hours, and Lulu, not a stock I talk about very often on the channel. I talked about it on the other channel when I did my reaction to that new ETF that's out there, and I talked a little bit about it in that video on my reaction channel, right? But in regards to Lulu, earnings per share came in at $1.97 was expected. So a small beat there. Small beat on revenue, 1.86 but versus 1.81. Okay. As far as their guidance, it wasn't great guidance by any stretch of imagination. It was like small misses as far as guidance. But the problem with a stock like Lulu is it has a rich valuation, very rich valuation. We're talking about this as a clothing company, and they try to command essentially the sort of PE metrics that a Nike, a far more quality stock, commands. And for that reason, I have a lot of concerns. Right now, the valuations obviously come down from $60 billion at the peak, and obviously where things are trading at there, but it doesn't mean now it's a deal. The bottom line is this stock still isn't a deal, and this stock would have to fall another 50% for me to even be somewhat interested. Because at the end of the day, we know their business has been on fire the last few years because of the whole, work from home movement and, this active wear and all those sorts of trends, right? But at the end of the day, I think it's getting a bit played out now. And I think it's just, I don't want to call it just a trend company. I don't want to necessarily put them into that category, but like a Peloton or something like that, but I don't think it's as lasting of a brand as a lot of folks think it is today. And I think we'll see that kind of play out over the next several years. Lululemon is not Nike, but people are trying to treat Lululemon like it's Nike. And I think they're in for kind of a rude awakening in that whole situation, okay? Now, Palantir. Let's talk about Palantir. Big announcement here, and we'll talk about what this means for the stock, as well as some projected numbers and things like that, okay? So, the Centers for Disease Control and Prevention awarded a $443 million contract. In renewing software and digital capabilities, Palantir provides for disease surveillance and outbreak response. Now, this is another big deal for Palantir in the government space. Let's just call it what it is, okay? The CDC contracted Palantir to launch the public health infrastructure programs during the height of the Rona. And I still don't know if I can say that word. Like, you know, it was like you couldn't say it in 2020, you get demonetized or something. So I still don't know if I can say it. And the new common, it's sad, it's years later, man. And the new common operating picture approach will allow for long-term, as far as the company planning, operational consistencies, blah, blah, blah. Okay. At the end of the day, it's a huge deal for Palantir. It's another show that Palantir is in with the government in a very good way. It's not a small contract. We're talking about, you know, nearly a $500 million contract for the next 5 years. It's a major, major deal. And it definitely, maybe this was a deal that Alex Karp thought would go through last quarter, and maybe this was something, because he spoke about some of the government deals were moving a little slower. If you listen to the last conference call, right? Maybe this was one of those deals that just took a little while, little longer to kind of come in here. And, you know, I don't think the people sometimes with Palantir stock specifically, they get so frustrated about like some of these deals not coming through in a certain quarter versus another quarter or something like that. And it's that, dude, when you're dealing with government, like government's going to work on government time, and they'll do the deal eventually and it'll go through. But sometimes you got to wait a quarter or two longer than what was expected. And like if you own this stock, you can't get frustrated because if a company or a government takes an extra quarter to sign a deal. When you're talking about it's a $443 million deal, this takes time, man. We're not selling cheeseburgers at McDonald's here with this company. This is a $443 million contract. These things take a while sometimes to play out, okay? And so when Palantir is doing some of these deals that are for several $100 million, or maybe even $1 billion, or maybe even multi-billion dollars, right? These contracts can take a while, and it's worth it in the end, okay? The end of the day, if it comes in 2 months after it was supposed to come in or 2 months before, like, it doesn't mean much. At the end of the day, if you're doing a $500 million deal, it's just important you get the dang deal done, okay? And so a lot of people get frustrated by that, and I just look at it and I'm like, time has to play out sometimes in relation to these deals, right? What does it mean for the stock price in the short term? Nothing. You know, when it comes to Palantir, they can announce this, they can announce that. You know, that's a huge deal for Palantir. This is a $14 billion market cap company. You know, to announce a deal like that is tremendous for them. It's tremendous. But at the end of the day, what people really want to see with Palantir, they want to understand the business model better on Wall Street. And ultimately, what they want to see with Palantir is they want to see that major profitability start to kick in, right? And I think you'll start to see some profitability kick in a little bit in 2023. But I think in terms of the major profitability start to kick and ramp up, let's call it that, I think you're really going to see that in 2024 and 2025. And I think that will be the moment where a lot of folks on Wall Street start to realize, oh, wow, this company is really building to be a cash flow beast and a profit machine. And I think at that moment, Wall Street will get very excited behind this one and obviously want to make moves in regards to stock and those sorts of things, right? Now, somebody inside the Palantir chat, one of our members, because we have some tremendous members that are in the Palantir Discord chat, they shared their entire projections. So everybody that's in the Discord chat, whether it be the Palantir chat or just in the Discord chat and you want to check out those numbers, they posted them in there. And they actually went through their bull thesis, their bear thesis for many, many years out, all the way out to 2030 in terms of, like super level of detail around everything, okay? And so, yeah, I thought that was absolutely tremendous. By the way, if you're interested in joining us in the full Discord chat or just the Palantir chat, that will be the pinned comment down there if you're interested. And I think it's tremendous. We have so many folks that share their projections, their numbers. And I think in a market like this, it's very important to keep your eye on the prize long term with all these different companies, because it's so easy to get caught up in all the negativity in the short term and forget about the long term that these business models have. Even in regards to a stock like Tesla, right? It's so easy to get caught up into all the next year could be bad because, there's worries in China and production there, and if the economy's weak, blah, blah, blah. And everybody forgets the long-term futures these companies have. And so sometimes it's amazing to look at others' projections for where companies are going as far as their revenues, their net income, all these different numbers and metrics, right? And also run your own numbers and metrics and bring it back and be like, dang, man, I'm getting so caught up into what the worries are and what all the fear is for this next year, when really I'm forgetting what's going on with this company for the next 5 or 10 years. And ultimately, I think it's very important that we think long term and we keep our mindsets. We can talk about what's going on short term, but ultimately, when it comes to our investment decisions, we got to keep our eye on the prize and remember what's going on long term with these companies. Okay. Now, if you want some good news for the short term, I got some good news for the short term. Okay. Commodities continue their downward movement. Okay, lumber down almost 4% again today. WTI down another 2.5%. This is tremendous. Oats down again. It's good for Oatly. As far as the commodities index in general, down. Wheat down. Coffee down. So this is great. This is no doubt about this. This is great. Natural gas. Don't be surprised at all if that one starts to fall at some point in the first quarter of 2023. It's already come down way off highs, but don't be surprised if it starts to come down at some point there. As you get further and further into winter, and winter gets closer and closer to over, natural gas will likely make a pretty big downward move, no different than we saw WTI as summer went on and summer, eventually ended and WTI just kept falling and falling. So don't be surprised if a similar phenomenon happens there with natural gas, which will be just another good thing for inflation. We need all these commodities to continue to come down. And ultimately, if you own companies that have to use any of these sorts of commodities, don't be surprised if their margins go up dramatically in 2023, which is more good news, okay? Because at the end of the day, if you have to use whatever it is, right, and the price of that actual raw commodity continues to go down, it's going to likely make your margins go up in 2023 because you're just going to be able to buy the product for cheaper. And so, sometimes it just takes a little time to kind of work through the system, right? But eventually it works through the system, and then you can command much better margins as a company in general, which is obviously absolutely tremendous, okay? So, yeah, hope you guys enjoyed today's video. As always, I appreciate everybody joining me, being subscribed to the channel, Back to the Basics 2023. Also, if you're looking to join us in the private Discord chat, access any of those, check out the pinned comment down there, and get the exclusive content and everything else we got going on in there. Much love, and have a great day.